Okay, just a quick word about the many benefits of becoming a member of the Green Star Trading Patreon. If you follow the link in the description box of this video or any of my videos on YouTube, you'll be led to the Patreon page here where you can have a read of the various tiers and feel free to sign up. You'll be charged on a pro rata basis going forward. Let's have a quick look at what we've done on the Patreon so far this month. Right, so we've got our top dividend stock picks for the month of December 2022, 40 stocks listed, 20 ex-dividends for the month, hour-long video taking you through my picks for the month. That comes alongside the dividend calendar and the stock rating system. This is for our tier 3s. If you want access to this, you'll have to sign up at tier 3. This covers the investing side really here at Green Star Trading. We're not all just about Elliott wave theory. It is primarily what we're about, but I'm also a long-term investor as well, and I run portfolios on that basis as well as portfolios on a short-term trading basis. Now, we recently looked at a members count here as well for CHD. I'll do this for you if you make a request on the Discord and I find the time. I will dig into your own count and do a critique of it. We also had our economic indicators monthly review. This looks at housing, the ISM, consumer survey, CPI, employment, permit starts and sales for the housing, manufacturing and services for the ISM. We do this on a monthly basis to take a look at our leading indicators to keep a track of how the real economy is going. We had a live stream before that, and then we did a video on that gas. So we've done a whole bunch of stuff recently, but anyway, on top of all of that, if you join the tier 2, you get access to the public Discord and you unlock all of my educational content. So the 15-part, maybe 16-part video series on Elliott wave now, plus a series on trading and a series on technical analysis. All of these are still being added to over time, and that's all covered by tier 2. If you want to unlock the investing stuff such as the dividend calendar on a monthly basis, that's tier 3. But come over, have a read for yourself, and feel free to sign up anytime. Thank you very much for listening. Now let's get back to the video. Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, it's time for a quick look at the SPY, which is our proxy for the S&P 500. We're also going to look at the VIX and the PCC before we go today, but it's going to be a pretty quick video today. If you haven't seen last week's video, you should go back and watch it. I basically spoke about the obviousness of the incoming short trade, and that's where we are now. Mr. Market has handed us this downward trend line that everyone and his dog has noticed. And we've seen a break of trend, we've seen negative divergence at the top in our indicators, we've seen a standard trade setup, STS on a smaller time frame to get in short with, and we'll see one on a larger time frame to come in the next 2 or 3 weeks over Christmas period, maybe sooner. We'll have to wait and see. But either way, the obviousness of what I was pointing out has happened. Now that's no news to anybody. Everybody with a pair of eyes can see this trade, clear as a bell. You have absolutely no excuse to not be in on this now. However, because of that, although I'm in on it myself, I have to be honest, maybe I'm just becoming cynical in my old age, or I'm just such a bloody contrarian I can't help myself. My gut's telling me it's just too bloody obvious. And you know, maybe sometimes Mr. Market hands things to you on a platter, okay, but rarely does he do it so easily. So the contrarian hairs on the back of my neck are just saying, come on, really, this is too easy, you know. And I'm just becoming suspicious now. I'm perfectly happy to stay short and ride this down to new lows. That's cool by me. Stops in place. If I get kicked out, I get kicked out. But I'm of the opinion that it just strikes me as a little too easy. So how easy are we talking? Well, we came back to the 250-day exponential moving average. We came back to this massive downward resistance trend line. We broke an upward support line. We got huge divergence between a high and a lower, and a higher high in price, which was a lower high in the MACD. We got a high and a lower high in the RSI. We got strong bearish divergence on the daily time frame with break of trend. We came back to resistance, blah blah blah. Literally, I haven't seen such an obvious sell me signal for a long time, and that just puts my hairs up on the back of my neck a little bit, but it seems just a little too easy. Okay, sorry if I'm going on and on, but it's just how I feel about it. Now I'm happy to go along with it. I just find it a little suspicious. So, what is it that's suspicious, Tom? What has got you suspicious? Well, it's the way we broke this trend and reversed on the CPI data. Okay, It's not a surprise to me. If you're a member of the Patreon, you know my views on inflation, you know what I think is coming, you know how I'm preparing for it, and you know what I think is going to happen next, okay, over the next year. So none of that's news to you if you remember, but the way this reversed after breaking the trend, now what don't we do? We don't buy breakouts. It's something I constantly preach. If you buy a breakout, you are literally exit money. You are exit liquidity. You are a sucker, and you're asking to literally hand people market exit liquidity by you entering on a breakout. Right? That's why we don't buy breakouts. We buy retracements, whether we're buying or whether we're selling. Okay, so if you brought this just because it broke the trend, you got spanked for a bloody good reason. You deserved it, and I don't care if that makes me a prick or otherwise. I'm just trying to help people not do things like that. Now, what makes it suspicious is A, it seems to appear like three waves. It breaks an obvious trend and then immediately reverses. That has all the hallmarks in wave personality of what we call a wave B. Wave Bs are literally designed to do that to people. That's what they do. Right? They break a major level, draw in exit liquidity, and then immediately reverse. Alright, that's literally their behaviour. So they are phonies, they are fakes, they are liars. That's what these B waves are, and it just makes me suspicious that this might be A, B, C. Now if this is A, B, C, then this is a flat. Okay, and that's going to happen next. And this downward trend that everyone thinks is God is going to get broken, and we're going to go higher. Now there's no point preempting it, alright, and trying to be a smart ass. I am being a smart ass by talking about it to you guys at the moment, but I'm not even trying to preempt it, because what's the point? I've been given a sell signal, I'll go with that. Okay, if however that scenario plays out and I see an impulsive move out of a potential completed wave C and a pullback, I'm going to at least cover my short at that point. Okay, because that's just a signal that the market's about to do the unexpected. It doesn't mean it has to follow through. You can load up on the short and increase your position and exposure to the downside if it gives you that retracement, or you can view it bullishly. It's totally up to you. We'll talk about how to do that in a smaller time frame in a moment. So on that note, let's come in and have a look at how we can look at this. So let's turn off the moving averages for a moment. One thing I will note, other than just the divergence that we had, bullish divergence, downward trend in the ABV, still respected divergence in the MACD, is we've had push from volume on this breakdown. Right, the volume has increased after hitting that high, and we've had an increase in volume. It's died off a little bit on the daily time frame, but it is a significant spike, so we'll take note of that as well. So now let's come in on a smaller time frame and have a look at this, and we'll talk about it for a minute. So here's the bearish count. Now all of this was an ABC. Okay, into our next pivot. We've gone A to here in 5. We've gone A, B, C, zigzag to here in B, and now we're going to come down and C in 5 ways and make new lows, right? And that's why we're short. However, the only way I can get this little bit at the end to fly is as an expanding ending diagonal, and it has one of the worst structural appearances I've ever seen. Okay, because traditionally with an expanding diagonal, the fifth wave has a habit of falling short of the upper trend line. It has to be longer than the 3. The fifth here has to be longer than the 3. The 3 has to be longer than the 1, and they have to divide as zigzags. Every single wave has to divide as zigzags as an ending diagonal. What we have here is a very extreme breakout of the fifth, way beyond the trend line. 1, 2, 3 is bigger than 1, 4 is bigger than 2, 5 is bigger than 3. It fits as an expanding diagonal. I can live with that. I just think it looks ugly as sin, is all. But if that's the top, then that's the C, and then here's that first move back, like bloody clockwork. Move down, move back to broken trend. Here's your retracement. We don't buy the breakout. We buy the retrace. We don't sell the breakout. Sorry, we sell the retracement. That's what I call the STS, the standard trade setup that we use on the Patreon, and I teach more specifically, go into more detail about that. So if that's 1 and 2, then this is 1 and 2, this is 3 and 4, then we've got 3 and 4 of a larger degree, then we've got 5. Okay, now that becomes 1. So what happens next? Bum, bum, bum. A retest of the larger downward trend perhaps, or maybe a 50 to 61.8% retracement. This is the next STS, as I call it. Entry to the short side, 1, 2, down, tighten up that stop, and off we go. Continue to move lower, you'll get another bite of the cherry. So don't worry if you were asleep when this happened and you missed it. You'll get another chance on a larger time frame to join in the short to the downside. However, let's look at it in the bullish sense for a moment, and how we would deal with it and set ourselves up in a way where we can protect ourselves. So what if it's a sucker sell-off and it's got us all conned? Right, it's possible. It's possible it's got us all conned. Now, how you get up here is totally up for debate. It's ugly as an impulse, right? But what if it's 1, 2, 3, 4, and 5 into 1 or A, and we're doing something else? I don't know, but let's just say that it's 1. Well, the reason I'm suspicious is because this could be 3 waves, and this could be 3 waves. Now, if this is 3 and this is 3, then this, my friends, has to be 5. Okay? Well, it doesn't have to be. It's 3 with an expanded B wave, so it's highly likely to be 5 because it's going to be a flat rather than a combination. Alright, so if it's gone 3, this will be 5, 1, 2, 3, 4, 5. And then that means we've gone 1, 2 to the upside. And then this retracement, right, that everyone's waiting to enter short on, to fill up and load up on their shorts, is actually 1, 2, and then we come out in 3, 4, and 5 again, maybe to a lower high, who knows, and there's your 1. Now, on a smaller wave degree, here comes back the 2, people will be entering short again, but this will be giving liquidity to the bulls. So you come in here, and then this turns out to be a 1 and a 2 on a smaller time frame, and this is the entry to the upside. So you see what I mean by saying you'll have the opportunity to cover your short position if you're already short, because you go 1, 2, 3, 4, 5, 1, 2, 3, 4, 5 maybe, 3 back, there's the long to cover it. Okay, there's the stop, there's your entry. Now this is all theoretical, it won't work out perfectly like this, but you'll get the opportunity to do it. It'll just look different from how I draw it. It may look exactly the same, who knows. But that's my point. So if this is a B wave, sucker B wave, and this is an A, and this is a C, right, then the next move will actually be higher. Which means if you've entered short off of that pivot, okay, that's where you get stopped out, unless you move your stop forward into profit, in which case you're out of the trade and you'll wait for a retracement back to go bullish. You'll flip bullish and enter off of that level instead. That's how I intend to deal with this situation. That's exactly what I'm going to do, and I'm just going to wait it out now. Now, none of that might be a concern. None of that might be a problem. We might well end up with just a fall down to new lows now. Okay, and then it's all hunky-dory. I've got no problems, have I? And you've got no problems, and Mr. Market was giving us the most obvious trade ever, and we should all just tap each other on the back and be happy with it. Right, because there you go. Break a trend, move down, retest of it, and off we go. So that's it really, guys. That's all I really wanted to talk about today. We'll come and have a look at the VIX and the PCC, but to sum up, in case for some reason you've lost me, I know if you're new to the channel you might be going, what is he going on about? So let's break it down, super duper simple, and turn off all the Elliott wave noise for the moment. We've had a break of trend and a retest, a new high and a move down. All I'm saying is there are 2 ways of looking at this. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Down we go. We entered short here. We can reload up here. We can reload up here. We can reload up here. If you want to go into a 4th, into a 5th wave, I wouldn't recommend it. We're trying to grab the 3. But either way, you're going to have multiple lower highs as the wave degrees develop in this 5 wave move down to add to your short position. That's the one way of looking at it. That's the primary count. Now, the alternative is this is a B wave of a flat structure, and we've gone A, B, and this is going to be 5 waves into C. It's going to have everyone convinced of its motive, and then what's actually going to happen is we're going to come out of here in a 1 and a 2. This will be where people load up on shorts again, and then it's going to do this. Right, so here, wherever it comes, if you want to take it, I'm not saying you have to, that would be the opportunity to cover long in case we do break out higher. Or you could just load up on shorts and tighten up your stops. Okay, if that happens, that's alternative idea happens, and this will be a 5-wave C wave, and we'll reverse and go higher. If it's not, and it's 5 into 1, we will reverse into 2, we will not go higher, and we will fall in 3, 4 and 5. And that is it, guys. So enjoy it. It's a Christmas present. I haven't seen a Christmas present offered up quite so obviously before, or for a very, very long time. I'd have to scratch my head as to figure out when was the last time I saw something like that. But just enjoy it, because if it does turn out to be 5 waves lower, you've just been given the clearest entry signal you're probably ever going to get, and ride it down to new lows. And we'll be seeing you sometime after Christmas, and we can talk about what happened. If it breaks out and goes higher, I won't say I told you so, because I haven't got the balls, or the gall, I should say, either, to be honest, about in terms of my strength of my conviction, to tell you that it's going to do that. I'm just saying, keep it on the radar, right? Because it could happen. So just be aware of it, okay? And don't be surprised if it does. Right, so there you go, guys. Let's come over and have a look now at the VIX. We've still got our little triangular compression-y, pattern-y thing going on. I don't really know what to make of it, to be honest. It could be another move up again, and then a break down to the lower trend line here. It could be a break to new levels, a break of this rising trend line. I don't think that's likely. I think we've got this raising lower level, this lower raising level of volatility is just a thing now. But if it were to break down, that would be an incredibly bullish sign for the markets. If it breaks higher into here, that would support the idea of a more violent sell-off and a final rally, or we should say a final spike in the VIX. You know, suggesting that an actual market low, like all of these lows that have occurred in the market, might actually be on the way, or we get a violent eruption like COVID or the GFC, and we actually make a run through this zone and go for some serious freaking high volatility levels. Alright, that's basically the way I see it, and I think if the market breaks down, we'll see how the volatility reacts. If it becomes more volatile, then we can consider a more significant capitulation event being on the cards. If it continues to remain just mucking about, it's highly likely the market will just continue its orderly sell-off. If it breaks violently down for whatever reason, that's a sign that I think the market's going to rally like buggery. You know, so we'll just have to wait and see. PCC is giving similarly confusing signals at the moment. We've got this long-term descending trend line that's been present all the way back since October 2011. This is the 60 exponential moving average here. We can see lower high, lower high, lower high, lower high, lower high. We do have a little triangular compression pattern going on here. This could be a pennant of some sort. I'm not sure you can do Elliott wave of the moving averages of the PCC, but either way, if this were to suddenly break out higher, that's your capitulation event in the markets. That's your capitulation event, that's your low, that's your final breakdown. It may be on the cards. Then again, if we roll up to here and roll over again, break this 250 exponential moving average, and the VIX breaks down and the market rallies, I'm going to say that's the market bottom. Yeah, I've already felt that the market's bottom given what I've seen here, but I'll go along for the ride because that's what the market's telling me to do at the moment. But if all that reverses, I'm going to become more convinced that the lows are in. So, to sum up, you've been handed an early Christmas present. The market's let you come back to a major line of resistance, and it's giving you an opportunity to sell from it. So why would you do anything different? If it does turn out to con us all, and this was a B wave and my contrarian suspicions are correct, then we'll all set the trade up to go to the long side instead. Okay, I hope that's been of use to you. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below, and as always, an enormous thank you to my Patreon subscribers. Your support is massively appreciated, especially at a time like this. You know the issues we've been dealing with at the moment as a family, and I appreciate your support. And I want to just say to all of you on YouTube, in case I don't get any work out next week, I am going to be incredibly busy. I will try to, but preemptive Merry Christmas just in case I don't see you again until afterwards. And If you are interested in joining up to the Patreon, there's a link in the description box below. Feel free to come over, have a read of the tiers, and feel free to sign up, and we'll be welcome to have you, or you'll be welcome, and we'll be glad to have you, I should say. And if you're not following me on Twitter yet, please do so. Whenever I post a video on YouTube, I always post a link on Twitter as well. Alright guys, take care of yourselves, and I'll be back with you as soon as I can. All the best. Bye bye.